By the way, for those of you that like chart patterns are perfect ways to kind of wrap your brain around this idea of trending versus non-trending strategies. Rectangles, triangles, pennants, double and triple tops, double and triple bottoms. Those are sideways market strategies. Okay? If a triangle is occurring in accumulation, I'm waiting for a breakout or breakdown to the support or resistance. If a rectangle is occurring in distribution, I'll fade or short the ceiling, or I'll fade or buy the floor, expecting there to be an exhaustion at these key levels. If I see a channel or a wedge, these are trending patterns. I'll look for either the momentum, I should say the trend to continue, or I'll look for it to reverse. So chart patterns, you could utilize the PRS for that. That's a really good tool to use if you're thinking to yourself, well, I'm not really sure if I have a trending or non-trending strategy. I'm not sure which one it is that I have, and I get that a lot. Just give me one moment here. I'm going to bring up the PRS. I think the chart patterns are a great way to do it. Here's the different patterns that the PRS scans for. So how to identify non-trending patterns? Well, triangles, triangles, triangles. All three of these non-trending sideways patterns. By the way, triangles tend to start off in a distribution cycle when the range is wider, okay? And they tend to get into the narrows, this is what I call the narrows of the pattern, as the range tightens and they turn into distribution. So a lot of times you'll see a triangle start off with like a 2 to 4 o'clock distribution angle and flatten to a 3 until eventually the breakout or breakdown. Anytime you have a pattern with a horizontal level, like the ascending and descending triangle, like the triple top, triple bottom, double top, double bottom, a rectangle, anytime you have a pattern with a horizontal level and you have a 2 to 4 o'clock market, in other words, a distribution market, that's when you can look to possibly fade or short ceilings or buy floors, because you're looking for that exhaustion. A fade is an exhaustion. It anticipates that at a past high or a past low, prices will simply run out of momentum and exhaust and reverse. Okay, that's the expectation. We identify sideways markets with the wave, and then we look for the sideways patterns to match up. Okay, so again, rectangles, triangles, double tops, double bottoms, triple tops, triple bottoms, pennants. Okay, these are classic sideways markets patterns. Channel down, channel up, falling wedge, rising wedge, just as the name implies, these are classic trending patterns, uptrends or downtrends. Okay, so again, if you don't have a set of tools right now where you could concretely say, wow, this is a trending strategy, this is a non-trending strategy, go ahead and use the PRS. Okay, the PRS, by the way, will give you another insight into the opinion of the trend, because what it'll do, just bear with me a moment, is, as you can see, it'll give you this initial trend reading. Okay, let me give you another little piece of helpful advice if you are going to use a PRS to help confirm or help identify market cycles. I still think the wave is an excellent tool to use on your live charts, but the PRS is a great secondary tool. You can use the two in conjunction. They're very powerful. Initial trend basically points to the trend that preceded the formation's development. So if I had a triangle pattern or a rectangle pattern, let's take a look at the Euro-US dollar here, and we'll see what kind of patterns we have. Okay, here's a 30-minute falling wedge. Okay, falling wedge meaning what? Downtrending pattern. I look at this initial trend. I can also look at my wave, right? And I see that the initial trend reading is 1, 2, 3, 4, 5 bars. Okay, the initial trend can start at 0 and basically go to 10 bars. 0 means flat, accumulation. And really 0 bars to 3 bars indicates a flat sideways accumulation cycle. 0 to 3 bars on that initial trend. 4 to 5 bars indicates more distribution. Okay, 4 to 5 bars, a little bit more distribution. 6 or greater, so 6 to 10 bars, that's a trend. So what's happening right here? I'm actually getting 5 bars. Okay, so I just said that was distribution, right? What happens in distribution? prices are likely to exhaust at key highs or lows, at near-term highs or lows. So I don't necessarily have a great downtrend anymore according to the initial trend. However, because this is pointing to distribution, what I would look at is some of the near-term highs or lows. Maybe there's a near-term high here around 36.34. So just this initial trend is saying, hey, prices could get up to this past high, but it's likely to do what? Exhaust, right? And do what then after that? Possibly re-weaken. Possibly weaken again. Re-weaken isn't a word, is it? But you know what I'm saying. It could possibly weaken after peaking at this near-term high, and then possibly do what? Head down lower again. Continue. Okay? This reading is really helpful because here's what happens to a lot of traders who don't understand market cycles. Let's say prices were to break the resistance of this downtrend, and they kind of have, haven't they? Okay? They kind of have started to break that resistance. Take a look here. They broke it, right? But, and that's not a perfect line, but you know what I'm saying. So they broke it, right? A lot of traders would just automatically say, wow, this is a trend reversal, I'm going to buy. What they would be overlooking is the fact that the market could actually be still weak in distribution, where we're very likely to see an exhaustion at this area. So we could move up higher to about this area at 36.34, 36.30, and then head back down lower. Okay? The distribution cycle points that out with that 5-bar reading on the initial trend. Now, again, I always recommend using the combination of not just the initial trend on the PRS, but also going back to your live chart where you've got the wave. So let's go to a 30-minute chart, live chart of the Euro-US dollar right now. Let's go back to that hard right edge and see what's actually going on with the wave assessment. So my wave is still showing a pretty strong downtrend, is it not, on the 30-minute chart? I don't think there's any argument about that. But I think what you're seeing reflected on the initial trend reading of the PRS, they're both in agreement. The market's heading down lower. We had that downward angling chart pattern result. But I think what the PRS is actually pointing out is the fact that we're starting to do a little bit of gathering here. Not enough to call it accumulation, but prices are getting a little bit range bound. The wave is still saying, hey, this is a downtrend. The PRS is probably being a little bit sensitive, saying, well, we're expecting distribution, which is to say we're expecting exhaustion at near-term highs, okay, which more or less would put not only the assessment of the trend possibly exhausting at highs based upon the opinion of the PRS, and certainly a downtrend, a markdown cycle based upon the assessment of the wave. They're kind of in the same opinion, aren't they? They might be giving a slightly different opinion of this current price action. The wave does not react quickly, which is part of its design. The reason I chose the 34 period, one, because it's a Fibonacci number, but two, I had tested the Fibonacci number series all the way to 1,597. That's a Fibonacci number as well. And what I found during this testing was that the 34 tended to not overreact, tended to be excellent dynamic support and resistance, and maintain its angle even when prices do this kind of what I call hiccup. Okay? So the overall direction is still down, but prices have hiccuped a little bit. They've bounced, but I wouldn't consider this bounce a reversal. Okay? And basically, I would not call any price action a reversal until one of two things happen. Either the wave will flatten out and transition out of a downtrend, or prices will rally up through the top of the wave. That's how I'll assess either the transition out of the markdown cycle or a reversal of the markdown cycle. Any questions so far? So I hope what you're seeing is we're kind of slowly getting a little bit more advanced as we're progressing here. We started off with some basic concepts and now we're building on it. Okay? So I would say this is kind of the first half of our discussion here. We're going to go on and get a little bit more advanced here as we continue. But what I want to do is go ahead and address some questions. So bear with me a moment. I'm going to go through the text window and we'll talk about some questions.